This year, many homeowners will be forced to sell their homes due to unemployment, rising interest rates and higher living expenses. Now, some people will be compelled to downsize, while others will end up renting an apartment or returning to their parents' homes. To discuss this further, we're joined by property economist at Roeder and Associates, Erwin. Thank you very much for your time this afternoon. And it's a very concerning picture that you've painted for homeowners in particular, given the current times. Maybe give us some of the reasons that 2023 is looking like it's going to be one of the toughest years for consumers that are engaged in the property market.
Yeah, there are there are many reasons for that, but you can sum it up by saying, firstly, it's the world economy, stupid. The World Bank is forecasting that the world economy could go into recession this year. And of course, South Africa's economy is a very open economy, which means we trade a lot with the outside world. So when the outside world is going through a tough time, then we will also ipso facto go through a tough time. We'll be exporting less, so we'll have less of a maneuverability there. And then, of course, South Africa's economy, as you know, we are also having rising interest rates, like in the rest of the world. Because of that, of course, that alone will depress growth in South Africa. And then, of course, as we all know, there's this self-inflicted this self-goal, this own goal, and that's called Eskom. There's no ways that the modern economy can grow while you don't have electricity in abundance. And so there's no doubt about South Africa's also entering a period of stagnation, if not maybe even going into recession. Although I must say that the consensus opinion amongst economists, for what it's worth at the moment, is that they don't expect us to go into recession, but that the growth rate will be pretty low in real terms in 2023. Now, the important point here is that there's a good correlation between growth in the economy on the one hand and growth in house prices. When the economy is going through a tough time, then house prices stop growing, and in the worst case scenario, they actually decline. Historically, the worst we've seen in house prices declining was about 10%. And South Africa has been going through quite a few tough depressions, if not historically. So we've got good evidence on that score. So the question then, of course, arises as an owner of a house, and you are maybe a marginal case. Maybe you've lost your job, or maybe you've overreached yourself and you've made incurred debts, like buying food on credit. I mean, that's the worst that you could think of. The question is, how should you react? Now, I would argue that the only way to salvage the situation is to watch your finances very, very carefully and to act proactively. When you see you're not going to make the installments this a month or next month or so, go and speak to your bank proactively, because you don't want to be in a situation where the bank forecloses on you. That is a big loss.
Yeah, and I mean, you've painted quite a broad picture in terms of the different headwinds that we can expect as households or consumers in 2023. And you've spoken about the issue of Eskom, but the rising interest rates are also a big thing, because your affordability level 6 interest rates ago is completely different to what it would be now because of those hikes that we have seen. So, I mean, in terms of that outlook, what are we expecting to see from the Reserve Bank when it comes to those interest rates, and whether there will be any kind of reprieve, perhaps even towards the end of this year, for someone who desperately doesn't want to sell their home and will try to hold on to it by any means possible?
Yeah, interest rates is probably the most difficult variable in the economy to forecast, because there are so many factors that are working on the direction that interest rates go, including political factors, although less so in South Africa at the moment. because our Reserve Bank, our central bank, in other words, is still independent. So I wouldn't venture what exactly will happen and when it will happen when it comes to interest rates. But what we do know is that interest rates will keep on rising for another few months at least. And as you correctly pointed out, that's much higher than the very low, the ultra low interest rates we had only a few months ago. So inevitably, that's going to have a negative effect on all income-producing assets, including property. Even though you may own a property and you don't let it out, it still will be affected by rising interest rates because, of course, holding all other factors constant, just rising interest rates means that affordability becomes less, and especially, of course, for people on the margin. Yeah, so, and on top of that, salaries and wages, of course, are not going to keep up on average with inflation. I think that's a pretty significant statement to make. I'm quite happy to make that forecast. So that will also in itself, without rising interest rates, that will also have a negative effect on affordability. So yeah, we are entering a period where there are so many factors internationally and locally that are coming together, which makes a forecast for this year quite easy in a certain sense. Of course, you can never make an accurate forecast, but there's no doubt that the trend will be downwards or sideways at best.
And as you speak and reflect on this trend in the property sector, do you think that you will find that more and more households will opt to sell or let out their properties, or this idea that you've mentioned a little bit earlier on downsizing? Do you think that we will be seeing quite a bit of that happening this year in terms of a trend because of the various factors that you've just described to us?
Yeah, look, normally when you are the owner of a house and when you have a mortgage on it, the last thing you think of is selling your house, unless, of course, you've got no other option. So selling the house tends to be the last option. The second last option is selling your car, if you have a car. So what I'm expecting is that on the margin, yes, it's inevitable when you go through an economic time that is tough, as we are forecasting, then inevitably there will be people who won't be able to afford their current house or entering the housing market in the first instance. So under those circumstances, yes, unfortunately, you will have forced sales. And what I'm advocating is that please, when you are in that situation, that you see that your finances are not working out, act proactively. Go and see your bank manager, the so-called bank manager. Go and see your bank and try to arrange something. The last thing you want to have is a situation where we are 3 months outstanding in your installments, and the bank then starts threatening you with. You don't want that, because when the house is sold and in an auction, you normally don't get the market value, or very seldom do get the market value. So act proactively.
No, absolutely. Thank you very much for those insights, and for our viewers to act proactively in these tough times. That is property economist at Ridder and Associates, Erwin, joining us this afternoon.